And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, leading the charge, giving us the information about our money, our investments, our planning for our retirement and financial future to have more confidence in our quality of life into and throughout retirement. Tim, we always appreciate the guidance, the insight that you provide here on the program. Thank you for being here for another great episode of Protect and Grow.
Peter, it's absolutely my pleasure. We're here today to help a lot of people on some interesting subjects, annuities and life insurance and LTC. Annuities, some people love them, some people hate them. Life, they think later on in their lives they don't need the life insurance. And long-term care, a lot of people are self-insuring out there. So I think we should dive right into it.
Well, Tim, studies have shown that the number of people and the amounts being deposited into annuities have hit record highs year after year after year for like the last 5 years. So I think some of the stigma around annuities is dissipating or disappearing. People are understanding what they can do, what they do well, which is to provide that baseline for guaranteed retirement income.
Yeah, I would say it's the bedrock, right, of a financial plan. You have, people, oh, I don't like annuities, and Social Security is just that, and it's been
a government mandated annuity.
Exactly. And it's been proven that people that have a guaranteed lifetime income stream are happier in retirement. There's no, am I going to be able to pay my bills? It's coming, along with your Social Security, it can add up to a really good retirement.
Another form of annuity that people loved, just so long as you didn't call it an annuity, Tim, pensions from companies. People loved and appreciated, depended on those pensions, as long as you didn't call them an annuity. But pensions provided a huge, substantial amount of retirement security that by and large we are missing as American workers these days.
Well, I always tell the stat in class, about 15 years ago, there was over 250 companies with pensions, and nowadays there's about 50, and most of them are life insurance companies that are actually doing them. So that being said, and I think the annuity with the interest rates being as high as they are some of the best times right now is to purchase them.
Well, ladies and gentlemen, if you've got questions, if you would like to explore the use, the utilization, the appropriate positioning of insurance, life insurance, if you've got questions about long-term care and how to address the potential costs of medical expenses and long-term care throughout retirement, if you'd like to look at how to leverage money to generate as much guaranteed lifetime income as possible, these are all questions that we will address on today's program, but you can get more information by giving a call, by setting up a strategy session, by getting your Protect and Grow written retirement income plan, by reaching out to TJ Stearns, Inc., Tim Stearns, CFP now, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, also available online, tjstearns.com, tjstearns.com. And as we kick off the program today, do want to give you kudos, a beautiful facelift, a redesign of the website. So many different resources, tools, calculators available now at tjstearns.com. Just a great improvement on the website.
Well, Peter, we're really happy with it. I think it's much more interactive for people to understand kind of what we're trying to accomplish here. And there's a lot of good tidbits on there. I also want to add that we are still, for the first 10 callers with over $1 million worth of assets, we're happy to get our book that was just published in November, Solving the Modern Retirement Riddle, into their hands. We even revamped the cover of the book. So it's a lot of good information in there. Chapter by chapter, it takes care of, how to get there properly being retired.
And available on Kindle as an ebook as well. So if you would like your copy of Solving the Modern Retirement Riddle, just pick up the phone, be one of the first 10 callers to the program with at least $1 million saved for retirement, because many of the strategies are for those that have been more aggressive savers and investors, doing what we need to do for the realistic opportunities of a lasting quality of life and confidence and financial security into and throughout retirement. But we still have doubts and worries. We still have questions. We still want to use our money efficiently and effectively, provide leverage. So that's what this book, Solving the Modern Retirement Riddle, is all about. Pick up the phone, give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim, the topics of today's program: annuities, life insurance, long-term care. At the core, we're talking about insurance. And with most any kind of insurance, it's like we'd never want to have to use the insurance for the event that we are insuring against, right? But these forms of insurance are there for a significant amount of additional financial protection. And there are a couple forms of insurance where ultimately we do want to use them. And I think that, it's not auto insurance where that means we got into a car accident. It's not homeowners insurance where it means we had a disaster in the house. These are for protections for income into and throughout retirement, and then ultimately to pass on leveraged wealth through our family in the form of a legacy.
Right. A lot of people have a lot of misconceptions, of annuities. The ones that we work with, number one, if you're married, it's going to be a joint income that we're going to work on, right? We want increasing income to stay above inflation. And a lot of people think, oh, if my wife and I take one, we get one income payment and something happens to us, that then we're out of luck and the money goes back to the insurance company. That might have been how it was 25 years ago or something. But nowadays, any residual money is going to end up with, let's say, the Smith family. Mary and John Smith come in here, they open up an annuity, they're using it as their income, and they both pass away somehow. Whatever's left in there is going to go to the family. But I mean, basically it was set up for Mary and Jack to, be able to, live, and it pays the bills and that type of thing. And that's what we're looking to do. Then they have a growth bucket for all the fun stuff that they want to do in life. Yeah. But knowing that the bills are being paid is the big thing.
And that's really the strength, the positioning, the goal of an annuity is to provide that baseline of income, but in a way that's dependable, reliable, contractually guaranteed to us. And in many cases, Tim, leveraged from what Wall Street would suggest we should be able to pull as a cash flow from our portfolio.
Right. And I mean, the big thing that I've seen is that when the market has taken a downturn, I have people come in here and they're dipping into these accounts when they've taken a hit in the market. That's terrible, So why not have something like a fixed income option that, back in my early career, you'd use a bond for, right? The dividends as an income play. They haven't been exactly great interest rates there. So that's one of the reasons that we're telling people, look at these annuities. They're safe, they're secure, and they're guaranteed to pay out.
And when it comes to retirement, Tim, ROI really is about reliability of income.
Reliability of income. I can't say it better. It's an excellent way to describe what people are going to feel like. That a check is coming monthly, that it's going to help you pay your bills. The market is going down. We don't care about that. If the market's up, we don't care about that. At the end of the day, it's about having a guaranteed money that comes in, pays your bills, and you're enjoying your best life. And we've talked about this ad nauseum, but you have one shot at an ideal retirement, right? You don't get do-overs when you're 80 years old to say to your spouse, oh, I guess wrong on this. So when you're building an income plan, part of the income plan should come through an annuity. And it's been proven that it works.
Well, Tim, the reason why annuities specifically leverage to optimize retirement income, to optimize the income generation efficiently, is that you could take a higher income out of a bank account or a market-based account. But if that balance does hit zero, that's it. You're out of income, you're out of asset, you're out of lump sum, you're out of inheritance value. Whereas with the annuity, you are contractually guaranteed a lifetime of income. So if the balance does hit zero, you still continue to receive checks for as long as you're alive. And I think that's why that higher cash flow is, at least in part, that's why it is possible to generate through exclusively an annuity.
Right. I mean, what you're talking about, Peter, is the lifetime income rider. I don't think a lot of people understand that. But again, if you're getting payments and that account goes to zero, the next month you will still receive a payment. If I was in a mutual fund or a stock account where I'm just taking out money every month and it goes to zero, that's the end of it, right? And that's what we call, on the annuity side, a mortality credit, right? So it's based on both a joint income is what we normally do if you're married, and it will pay out until neither spouse is here anymore. And again, back to the original start of the show, if there's any money left in there, it goes to the family. It does not go back to the insurance company. I wish there was a book called The Misconceptions of Annuities. It would be pages and pages of all these misnomers that I hear people saying to us, they just wrap their brain around it and actually read the book. They'll understand that it's legit.
Yeah, Tim, you're an author. Get typing, right?
That's my next book.
Yeah, absolutely. Well, the current book, again, making an offer for solving the modern retirement riddle on today's program. Just be one of the first 10 callers. These strategies are for those who have saved $1 million or more. So if that is you, give a call now, be one of the first 10 callers and receive a copy of the book, Solving the Modern Retirement Riddle. 800-640-2256. That is 800-640-2256. 800-640-2256. And Tim, the kind of leverage that can be provided through certain annuities, through certain types of life insurance, and where they tend to be most appropriate might be for those avid savers and investors, those who have done a reasonable job of building to a certain point where they can realistically expect a more confident kind of lifestyle and income into and throughout retirement, but don't want to jeopardize it with large losses, market volatility, and downturns.
It's funny you bring that up, Peter. I just had a couple in the office the other day, and we were basically refinancing their annuity, right? They had an annuity from 2015, and they're saying, oh, this is what it pays out. And I said, well, do you mind if we take a look at what the payouts could be at a new product? And we looked, and sure as heck, it beat that product. My point is, she said to me right away, but wait, is it as safe as the old one? The answer is, of course. So there's a lot of refinancing of annuities going on right now, where we see annuities that have what they call high cap rates or large spreads. And I can explain that in a different show, but it's in the book as well. And basically it's saying, there's a better opportunity out there. You should, give us a call. We can take a look at it. We call it an MRI. It's just like you do an MRI on a shoulder or your knee. We're going to take an MRI and look at your current annuity and see if there's something better out there. If there's not, you're in good shape. We leave it alone.
What I like about the MRI analogy, Tim, you can go to a doctor and get an X-ray, but it shows a flat 2D image. And MRI can actually, it takes slices, right, and the doctor can actually see everything, the makeup, what's inside of it in its full capacity, 3D, top to bottom, left to right, in all kind of directions, right? And that's what you're doing with the annuity MRI, is really slicing it, dissecting it, able to view it from every angle to know what's inside.
Exactly. I mean, not all our annuities are created equal. And the devil is a lot of times in the details. And that's why I say, sit down with someone like a certified financial planner practitioner like myself and look at what the opportunities are out there. It's no stone unturned. Why not look into it and just make sure you're not missing out on an opportunity.
Tim, how about we switch gears and talk a little bit about life insurance? There are a lot of different kinds and types. And also, I believe there is a perception that once we reach retirement, life insurance may no longer play a role or have a place or be appropriate. I feel as though in my own situation, and I'm looking into the future, but I mean, I understand I'm going to have a limited amount of money on the day that I retire, and I want the confidence to be able to spend it and enjoy it. And I feel as though the only way I'm going to have that confidence is that if I also give my wife the ability to replenish the supply and refill the bucket if I pass away after having enjoyed and spent some of our money together.
Peter, I was teaching a class in St. Louis, and now she's a client. A postal worker came up to me and she said, "I'm retired about a year now." And she said, "You know what the best thing about my pension is?" And I said, "I have no idea, Rosa. What is it?" And she said, "Well, every month I can spend as much as I want. I can spend it down to zero, and the next month the government fills it back up." And that is something that most of our listeners in the area will never know that feeling
Yeah.
unless they own an annuity. That's got to be a heck of a feeling to just feel like, yeah, I can spend everything I want this month. The next month I will get another check from the insurance company, guaranteed.
But Tim, with most Americans, we've only got that finite amount of money, the
Yes.
lump sum, the retirement nest egg. And so life insurance actually gives the same quality, but on the total amount, not the monthly paycheck that comes in with the annuity, but on the lump sum that is going to generate the income. Again, spending that throughout retirement, we have a way of dwindling down the lump sum that gave us the confidence to retire on day one. And in
Right.
order for me to feel comfortable spending, that life insurance, I do think plays a role and a value, especially for married couples or for those that transitioning and passing wealth as part of the legacy is part of their financial goals.
Do you ever look at how the Kennedys or the Waltons who own Walmart, how they extrapolate their wealth? It's through life insurance, right? So, when I talk to people who want to leave a legacy, they want to leave money to their children, I'll talk to them about life insurance. Not only is it great for them, as far as most of the life insurance policies nowadays have a long-term care component to it, but in addition, you can take tax qualified money like an IRA, pay the taxes on it, and put it into a life insurance policy that is going to extrapolate your wealth, just like the wealthy do. Like the Kennedys and the Waltons, like I say. These are, and it's tax free versus if you leave someone $100,000 in an IRA, that is not going to be $100,000. It's going to be taxed, right? And depending on the state you live in, it could be income tax attached to that as well. So what we're talking about is leaving money into a life insurance policy that will, pay to the generations tax-free money.
And Tim, for a lot of Americans, estate tax levels currently very high. I know those levels could come down and are
Yeah.
suggested that they will come down very significantly. But as it stands today, probably most Americans would not encounter estate taxes. Albeit, though, regardless of that, most Americans have not even paid income tax on the bulk of their savings and investments because they're in those tax deferred retirement accounts.
Exactly. And there's a whole another ball of wax with IRMA and that type of thing when you get into Medicare. These are things that we're looking at for clients. I don't think a lot of people know about it, or if they do, they don't understand the whole grand scheme of things. So when you're having an income allocation plan, all that goes into it.
And again, if you would like to get that income allocation, that protect and grow written retirement income plan put together, pick up the phone, give Tim Stearns, CFP, TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, even for a well-laid foundation for a retirement plan, even for a well-constructed structure for the retirement plan, long-term care expenses can be the 800-pound gorilla, the bull in the china shop, if you will. And there may not be any single solve-all solution for the potential expenses associated with long-term care. Can you speak to that?
Peter, with my mom is 94 years old. With her age group, long-term care came into vogue right when I was graduating college. And the traditional long-term care was simply use it or lose it. And you're seeing a lot of people out there who bought long-term care years ago. The insurance companies are coming back to them saying, "Hey, we didn't price this right, and so we're going to need to either diminish what the benefit was going to be, or or increase your premium to keep the level to what you were supposed to have contractually with them. So it's kind of a terrible thing. You put good money after bad. So what we've seen, and what my wife and I did, is this new era of these life insurance policies that actually have a component with long-term care. So in my example, my wife and I can take about 25% of our death benefit tax-free and use it for our long-term care. If I can't do two of my activities of daily living, or if I'm cognitively impaired, I wanted to have coverage of that. If I never use it, then guess what? The life insurance tax-free will go to my family. I think that's the best of both worlds. I'm also, by doing so, using that money as leverage to pay down taxes that will be attached to my estate. We talk about how high the federal estate tax levels are that you will not have to pay. Well, remember that sunsets at the end of 2025, and it's going to come roaring back because Congress isn't stupid. They know they've missed out on a lot of money that's there, and they're going to want to get their comeuppance.
Tim, the way I understand it, the insurance industry, the companies that offered traditional long-term care insurance also found it to be problematic and generally are out of the business because they underestimated the cost of care, how many people would need it, and how long they would use it for.
Right.
All of which really indicate that this is a very serious problem for us as individuals to have documented our plan for and taken some steps to address.
Well, yeah, I mean, you can self-insure, but I don't know how many years can you afford about $100,000?
I mean, that's a very confident kind of statement to be able to make and financial position to be in, Tim. But the money is providing you that confidence. And for a small fraction of the percentage of the growth that the money is generating for you each year, if you can make that statement, you can probably put in place a better way to leverage and protect the assets that are giving you that confidence, right? I mean, if I have a $600,000 house, I don't stick $600,000 in the bank and say, I don't need homeowners insurance, I'm self-insured.
Well, you have a 3 in 1,000th chance of burning your house down in your lifetime. And no one goes without homeowner insurance. I mean, the 0.001% of society might think of that. To your point, there's a 7 out of 10 chance that an individual over the age of 60 will need long-term care. And 9 out of 10 of us have not even addressed that. That's scary to me. You wouldn't go without home insurance. So I would not go without long-term care when you have a 70% chance that you're going to need it.
Well, I think that it certainly shows, Tim, the need to address it, right? Is the high frequency that we are experiencing that longer lives, longer life expectancy and longevity does not necessarily mean healthier, longer lives. And by and large, Tim, more and more people using those at-home nurses, using those nursing or skilled care facilities, using the nursing home longer, and those are more expensive than ever before. In fact, Genworth has a good online calculator that shows you the average cost of different levels of care today versus what it might be in 10 or 20 years. Rather staggering. In and around the Chicagoland area, anything from $8,500 a month all the way up to $19,000 a month. And if you're a married couple, that's on top of the routine expenses that you already had before for the healthy spouse.
Right. Yeah. I mean, you're looking at the bills. Self-insuring on as far as long-term care goes is, I think, crazy. If you don't use it, again, with the life insurance, you're leaving your family with money that's tax-free. I mean, it's a win-win for everyone. And who wants to be a burden to their family or friends?
Well, there are pros and cons, good, bad, ugly features of every financial option that is out there, every place that you can put your money. You've got to understand them, ladies and gentlemen. You've got to weigh specifically for you the pros and the cons of each and of many options and evaluate whether they are appropriate to help you achieve your goal. Today, we overviewed annuities, life insurance, long-term care, the strengths that they most often present the drawbacks of some of them. You need to understand that and rate where they can be attractive for your situation as part of a comprehensive plan. And in planning for retirement, there are certain protections that you do want to put in place because the money gives you financial confidence and quality of life. There are certain protections that you can place for those assets. And if you have saved at least $1 million or more for your retirement, you can call now and request a copy of Tim Stearns CFP's book, Solving the Modern Retirement Riddle, discusses many of the challenges that we face and the solutions for today's modern retirement. Give a call now, 800-640-2256. That is 800-640-2256, 800-640-2256. Tim also offers to put the Protect and Grow plan together for you specifically if you'd like to learn how you can retire or learn how to pay less in taxes, keep more of your money, then give a call now, request that Protect and Grow plan from Tim Stearns CFP, 800-640-2256. That's 800-640-2256. Tim, as always, a very fast-moving program. Time goes by very quickly, as it does in life. That's why we shouldn't delay, ladies and gentlemen. Get that plan put together today. 800-640-2256, 800-640-2256, or online at tjstearns.com, tjstearns.com. As always, Tim, we appreciate the time.
Thanks, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.